Hey, listeners, welcome back to Sustainability Street, our podcast on the intersection of commercial real estate and the world we live in. I'm your host, Therese Fitzgerald. There's a dramatic yet quiet shift that's occurring in commercial real estate and the larger business community. ESG is no longer a corporate buzzword, and companies are no longer bragging about targets and milestones. Yet at the same time, sustainability has increasingly become a financial lever that helps decide how competitive a building, a company, or a market can be. In this episode, we're fortunate to have as our guest CPE Senior Associate Editor Anca Gagiuc. Anca really has her finger on the pulse of green building trends, not just in the United States, but globally. In this conversation, she lays out how sustainability has gone from a reporting exercise to a critical tool for enhancing ROI and protecting value. Sit back and enjoy. But before we get to my conversation with Anca, I want to tell you about a new CPE newsletter. Every week, CPE's Sneak Peek delivers in-depth and timely long-form articles to your inbox before they appear on our website. Imagine walking into your next meeting and quoting coverage that isn't even published yet. With CPE's Sneak Peek, you can get ahead of the game. To subscribe, go to commercialsearch.com/news/subscriptions. That's commercialsearch.com/news/subscriptions. And now on to the episode. Hi, Anca. Thanks for returning to the podcast. It's always great to have you.
Thanks for having me back, Therese. It's always nice to talk to you, and I'm glad we're revisiting this topic because the conversation around sustainability has changed a lot since we first started discussing it.
Yeah, I wanted to talk about those changes. And I think your article titled Earth Day 2026, What's Driving Sustainable CRE Decisions Now, really encapsulated what's going on today. I think the overall theme of your article was sustainability is no longer tied to ESG or corporate social responsibility, and it's no longer about the future. Sustainability is increasingly a financial imperative with present day impacts on NOI and value. What are your thoughts on that?
Yes, I think that's exactly the shift. Sustainability is no longer only about ESG, corporate responsibility, or future goals. It is much more immediate now. It is showing up in NOI, asset value, financing, leasing, and operating costs. The way I would build on that is to say that sustainability has moved into its next phase, competitiveness. And by competitiveness, I mean very practical things. Can this building attract tenants? Can it secure financing? Can it manage future capital needs? Can it comply with new standards? Can it get enough power? And will it still look attractive to a buyer 5 or 10 years from now? So the divide is not just between owners who care about sustainability and owners who don't. It's between assets that are being positioned for the next operating environment and assets that may have to play catch up later, often at a higher cost. The market is starting to sort assets not only by whether they are green, but whether they are prepared.
Yes. So while sustainability is de emphasized as a corporate buzzword, it's becoming more of a financial lever.
Yep.
Uh, Speaking of assets that may need to catch up, I think 5 years ago we talked about a time in the future where there would be a green premium for properties that performed well on sustainability metrics and a brown discount for those that didn't. In your article, you talk about how that's already playing out in leasing, in what you refer to as a filtering that's occurring. Tell us about that.
What's interesting is that the green premium or brown discount does not always show up as a very direct conversation. A tenant may not say, "We rejected this building because of sustainability." The building may simply not make the shortlist. That is what makes filtering so important. Owners may think tenants are not asking about sustainability, but the tenant's broker, consultant, or internal real estate team may already be screening for things like energy performance, reporting capability, resilience, emissions exposure, or alignment with the tenant's own corporate goals. So the risk is invisible at first. The landlord may never hear the objection, but over time, it can show up in leasing velocity, vacancy, rent growth, and the quality of tenant demand. That is where sustainability becomes a competitiveness issue, not just a sustainability issue.
Let's move over to the investment side. How are lenders and investors thinking about sustainability risk today? And how does that affect future capital needs, liquidity, and exit values?
I would be a little careful about saying every lender or investor is pricing sustainability risk in the same way. I don't think the market is that clean yet. But the questions being asked are much more specific than they were 5 years ago. So it is less about, does this building have a certification, and more about, what is the energy exposure? What future capital work will be needed? Is there regulatory risk? What could happen to insurance costs? Will tenants still want this building in 5 or 10 years? That is what future capital exposure means to me. It is the money an owner may still need to spend to keep the building financeable, leasable, and competitive. And if that future spend is large, uncertain, or poorly understood, it affects underwriting today. So, yes, I do think sustainability has moved beyond being a feature. It is becoming part of a liquidity and exit value because buyers and lenders are thinking about how expensive an asset may be to defend over time.
I read that CPACE originations grew 63% last year. As listeners might know, CPACE is a public-private program that can finance up to 100% of energy efficiency projects and other upgrades, and it's paid back through a special property tax assessment. So apparently lenders and borrowers are getting more comfortable with sustainable finance.
Yes, sustainability financing is becoming more integrated in the capital stack, and CPACE is a good example. In a tighter capital environment, sustainability measures are more likely to survive if they are part of the capital plan early. If they are treated as late stage extras, they are much easier to cut out.
Let's talk about building performance standards. Are they helping older assets improve, or are they widening the divide between owners who are prepared or who can afford upgrades and those who are not? And how important is data and technology in that process?
I think building performance standards are doing both things at once. They're pushing the market towards better performance, which is important, but they're also revealing which owners have the capital data and technical capacity to respond early. For strong owners, the standards can create the reason to plan ahead. They can benchmark, identify weak points, sequence upgrades, and think about equipment replacement before deadlines become urgent. For others, the process may expose problems later. And sometimes the first challenge is not even the retrofit. It is understanding how the building actually performs and whether the data is accurate. That is where technology matters. Data can support a building's competitiveness, but only if it leads to action. A dashboard alone does not improve performance. The advantage comes from knowing what is happening in the building early enough to make better capital decisions and act on them.
Something else that's changed considerably over the past 5 years is access to electrical power has become critical in location decisions, particularly for industrial tenants and data center tenants. How are grid constraints already reshaping industrial and data center development?
Power is one of the clearest examples of how sustainability has become operational and financial. For data centers, advanced manufacturing, life sciences, and many industrial users, electricity availability is no longer just a background infrastructure issue. It can determine whether a site works at all. That changes the meaning of location. We
Mm-hmm.
usually think about location in terms of transportation, labor, land costs, and access to customers. But for power intensive users, the question is also, can the site get the load it needs on the timeline the tenant requires? So, grid constraints are reshaping development by changing where projects can go, how quickly they can move forward, and how early owners and developers have to think about energy strategy. The short version is power is becoming part of location.
Yeah, or power is location these days. Hey, it's Therese Fitzgerald. If you're enjoying this in-depth discussion, you'll enjoy receiving our sneak peek newsletter, which gives you the chance to read insightful long-form articles 1 week before they're published on our website. To subscribe, go to commercialsearch.com/news/subscriptions. That's commercialsearch.com/news/subscriptions. What happens to buildings or markets that simply can't deliver power fast enough?
If a building or a market cannot deliver power fast enough, it can lose momentum, even if the real fundamentals look good on paper. Projects can be delayed. Users may move to other markets. Owners may have to consider on site generation, battery storage, microgrids, or other strategies. But those solutions require capital, planning, and technical expertise. This is where the divide shows up again. Some owners and markets can respond with infrastructure planning, partnership with utilities, or alternative energy strategies. Others may fall behind because they cannot solve the power issue quickly enough. And for power intensive users, timing really matters. If the tenant needs capacity on a certain timeline and the market cannot deliver it, that can become a deal breaker. So a site can be well located in every traditional sense and still be at a disadvantage if it cannot get power. Power constraints can turn a timing issue into a competitiveness issue.
And what role is renewable energy playing in all that?
Solar is becoming a stronger force electricity wise. I was actually reading that there is this big utility company over in California, Pacific something. They recently announced that they reached over 1 million solar users that basically are feeding energy to the grid, right, in their
Mm-hmm.
area. And that was a big thing. And they were again pushing, emphasizing the importance of upgrading the grids, because they will be eventually too small to be able to transport such capacity or to accept such solar capacity that people are investing in, from
Wow.
single family owners to little businesses to big businesses and even multifamily communities, right? So
That's
renewables are going to continue to grow. There are other very interesting energy sources under research currently, such as the nuclear fusion, not fission, but fusion.
Mm-hmm.
It's really mind blowing. I mean, it's basically compressing some molecules, which will eventually create the helium, that gas, the laughing
Mm-hmm.
gas.
Mm-hmm.
Actually, not the one that you put in balloons. Um, and basically, by compressing those molecules, they're able to create such enormous capacity of energy that they use the comparison. You could drive your car around the world with just one tank of fuel, right? So that
Oh,
that
wow.
would be, yeah. So, and research is not in early phases, it's pretty advanced. So that's something else that might happen eventually. And what was very cool about it was that they don't need any rare minerals and resources, like solar panels do to a certain extent, because the resources they use are finite.
Right.
So, and this was like a big breakthrough because it only uses very, very tiny fractions of those resources that are actually replenishable in nature. I don't know. It's still, but
Mm-hmm.
it's not just I don't know, an idea. It's beyond the
Yeah.
idea. They're working on it. So,
Right.
and the best thing about it is exactly what renewable energy lacks, which is consistency, continuity, and reliability. You only have sun if it's sunny, you only have wind power if it's windy, and so on and so forth, right? But this would be independent of all of those, and it has no carbon footprint, and it's, but hey, humans are great. They have to come up with great
Right.
stuff, even if it takes generations and centuries. Eventually, evolution occurs.
Necessity is the mother of invention, as they say.
Yeah, the best one.
When it comes to design, what does future proofing a building mean today?
Future proofing today means designing a more demanding operating environment. It is not one feature. It is a combination of energy performance, resilience, flexible systems, electrification readiness, better envelopes, smarter controls, and the ability to adapt as standards tighten. One thing that comes up often is that sequencing matters. You do not want to make isolated upgrades that solve one problem but might create another. For example, envelope improvements, air sealing, windows, and insulation can change the economics of mechanical systems because they may allow owners to right size equipment later. So, if you've done all of this, you will need a smaller, hence cheaper equipment, right?
Mm-hmm.
Then rather than a larger one, which has to take care of all the other unresolved issues of your building. So, future proofing is partly about durability and partly about sequencing. The question is not what green features should we add? It is what decisions today will keep this building from becoming expensive to operate or obsolete later. Future proofing is not one feature. It is a sequence of decisions that keeps the building adaptable. The question is not just what to add, but what to avoid locking in.
Right. That's why early planning is important.
Yes, prevention and early planning.
I was at a conference recently and someone asked whether health and wellness had become a financial factor like resilience and energy performance have. Where do you see health and wellness in relation to other sustainability factors?
I do think health and wellness is becoming more financially relevant, but I would frame it as part of building performance rather than as a separate category. That is one reason LEAD V5 is interesting to watch. It still puts decarbonization at the center, but
Hmm.
it also gives more weight to quality of life, resilience, and ecological impact. So the market is not only asking whether a building uses less energy, it is also asking whether it is healthier, more comfortable, more resilient, and better aligned with how people actually use space.
Hmm.
The financial connection may be less direct than with energy costs, but it is still real. Health and wellness can show up through tenant satisfaction, employee experience, resident retention, leasing velocity, and the perceived quality of the asset. So I would not say it has fully become the same kind of underwriting factor as energy performance or resilience, but it is moving closer to the center of the conversation.
Yeah, I did an episode a few months ago about heat in the corporate environment and how making people comfortable and healthy is very important.
Central, yeah.
Hmm. Um, so, what sustainability trend will matter most, do you think, to commercial real estate executives over the next few years?
I would say the biggest trend is sustainability moving into the competitiveness phase. Proof of performance matters, but it is not the end point. It is the bridge. Once owners can measure and document how a building performs, the real question whether they can use that information to keep the asset competitive. That's the real question. That means better leasing, better financing, lower operating volatility, more predictable capital needs, stronger compliance positioning, and a more defensible exit. After the proof of performance stage, I think the next phase is optimization. Owners will not just measure energy use or emissions once a year. They will have to manage buildings more actively, sequence capital improvements better, and think about power availability and resilience, and use data to make the building more durable financially. So the trend is not one technology. It is the shift from sustainability as a claim to sustainability as evidence to sustainability as competitive strategy. Proof is not the destination. Proof is what allows the market to compare buildings. The next phase is not just measuring performance, it is using performance to make better capital, leasing, and operating decisions.
Okay. Good. Thank you so much. It's always fun when you come. Um,
Mm.
I have one question that I always ask my guests. I ask what they're reading or listening to on this topic that would inform my readers. Who or what are you following these days?
I'm more of a reader, so I point readers to a few buckets. For building performance standards, IMT, the Institute for Market Transformation, is very useful because it tracks where these policies are moving and what they mean for owners. That helps connect policy to actual building decisions. For certification and market direction, USGBC's LEAD V5 is worth watching because it shows how sustainability is expanding beyond energy alone. I would also tell people to read more about energy and grid coverage than they probably did 5 years
Hmm.
ago. The data center boom has made power availability a real estate issue. So sources like CBRE, Utility Drive, Bloomberg, Rocky Mountain Institute all help explain why power has become part of location strategy. And more broadly, I would keep an eye on ULI and Price Waterhouse Cooper's emerging trends because sustainability now shows up in investor strategy, insurance,
Hmm.
capital flows, and market selection. So The reading list has expanded. It is no longer only green building coverage, it is also energy, infrastructure, insurance, and capital markets.
All of these changes are really exciting. Well, thank you, Anca, for being my guest. I always enjoy our chats on sustainability, and I'm glad I was able to loop in my listeners on this one.
Thank you again for having me. It was a pleasure, as always.
Bye bye. And thank you, listeners, for joining me on Sustainability Street. If you have any questions about this episode or suggestions for future episodes, please reach out to me at therese.fitzgerald@cpe-mhn.com. And don't forget to subscribe to the CPE Sneak Peek newsletter to receive deep dive content before it's published on our website. To subscribe, go to commercialsearch.com/news/subscriptions. That's commercialsearch.com/news/subscriptions. Bye for now.